Hi, my name's Alan Jurd. I'm a real estate agent based in Cessnock in the Hunter Valley. I've been in the real estate industry for the last 26 years, so I've had plenty of experience with investing in property. And today I want to talk to you about the type of investment property or what I should be looking for in investment property if I'm a potential buyer. I get a lot of people who are just starting to explore the opportunity to buy their own investment property who quite often ask me this question: what should I look for? I guess the first question to ask yourself is, what are my goals? You know, if you have a plan, then you're more likely to achieve what you're looking for than if you don't. And so what I mean by that is, in my view, if you're looking to invest in property, you should have a long-term view. It should be at least 7 years. Historically, we find that property tends to double in value over a 7-year period. The average capital growth in our area is 6 to 7% per annum. And, you know, on top of that, we've got a 5% gross rental yield. So you need to be in the market for a period of time. If your goal is just to make a quick few dollars in a couple of years, you might be lucky to do that, but that's speculation, it's not investing. And I wouldn't recommend that new investors into the marketplace have that strategy. That's not really a goal, it's almost gambling. So if you've got a goal to be into the market for 7+ years, or if you're a younger person, you're looking at retirement in the future, you might be able to be in the market for 20-25 years, you're going to have a good experience. So then you've got to really be focused on what I'm actually looking for. A lot of people make the mistake of looking at a property that they might want to live in the future. You have to treat this as a business. So we're not looking at, you have to leave all of the emotion out of this decision. It's a business decision. And the things that I look for when I'm looking to invest in property are areas where I think there may be strong demand, not only now but in the future, and the things that drive that demand. And those things for me are, number one, are employment. You have to have jobs. If prices are going to go up, you have to have people who can afford to buy homes and who can afford to pay their mortgage. So I'm looking for employment now and maybe future employment trends where there's going to be some growth in employment, or whether we're likely to have an area which is surrounded by an industry that's not likely to be there. I also look at infrastructure, or likely infrastructure, because historically it's been proven that the areas that do best are the areas where there's major investment in infrastructure, i.e. ports, rail, freeway, those sort of projects that increase the population, increase employment, have a huge impact on capital growth. And that's why you really should be into property investment, in my view. It's long-term capital growth. Rental return is great when you retire, but when you're investing from the start, you want something that's going to grow in value. So then you can settle down and get your weekly investment return, your weekly rental return to live on. But in these early stages, for those that are just entering the market, you're looking for capital growth primarily. And then the other thing I look at is, should I buy a home or should I buy an apartment? And that'll depend on the area that you're looking at. And once again, if you're looking at an area where land's readily available, I'd be looking for land, house and land. I wouldn't be looking for an apartment. But if you're looking at an area where there's almost no land, for instance, the inner cities of Newcastle or Sydney, then I'd be looking for an apartment, because the capital growth there, on a percentage basis, will be the same as house and land would be, because there, once again, is not much supply. So it's all about supply and demand. But in the country, overwhelmingly, the highest capital growth rates are for house and land, not for apartments. And then the decision is, should I buy a new home or should I buy an older home? I personally prefer older homes, because older homes tend to be located in better areas where there are services. And by services, I mean schools, hospitals, transport, and they tend to be more established areas in terms of, leafier, sort of more desirable areas. They tend to be on hills, things that people are sort of, all the things that people are looking for that might drive the demand. Newer homes tend to be more popular with their investors who are looking to get depreciation allowances, because the depreciation allowance helps your cash flow. So it really depends on whether you've got strong cash flow or not. But if you've got strong cash flow, I would be highly recommending buying an older home, not a home that's falling down, but an older home in an established area, and get the largest plot of land that you can, because ultimately The land appreciates from the day that you buy it, and buildings depreciate. That's probably the most important thing to remember. The land, because it's a scarce commodity, continues to appreciate and buildings depreciate. So buy as much land as you possibly can, and you can't go wrong. 20 years from now or 10 years from now, you're going to be looking back and smiling at the decision that you made, because inflation is going to ensure the capital growth of that property.